Hi, good morning everyone. My name is Ram Dhamija. Welcome to my channel. I'm a full-time derivative trader and I talk about the markets. So today is 14th of April. Today is a holiday, but the Gift Nifty is indicating that we are already up by almost 350 points, which is going to be fantastic. So come tomorrow, hopefully if nothing happens in the US markets overnight, which are also looking positive right now, then we should open at 23,200 odd, which is going to be a good start. And not only Gift Nifty, but all the other Asian markets are also in green. And all of this is coming on the backdrop of the tariff news from US, wherein the tariffs have been put on a pause for 90 days. That was the start of the rally. And then even the reciprocal tariffs with China, a lot of exemptions have been made. So almost 25% of the trade that happens between China and US is now exempt. Semiconductors, computers, laptops, etc. So that is causing a relief in the Asian markets, and now more or less people are discounting the fact that these tariffs are going to go away and they're not going to have a big impact, at least for now. Of course, there is going to be a lot of deals that are going to be stuck, like for example, even with our country, there is a deficit of, if I'm not wrong, about $50 billion. So we are going to probably import more of US stuff, and that is how the bilateral deals are going to play out. So it looks like this storm might have got settled. There was a problem with respect to the US bond yields going up. That was a major issue. That is when the pause on tariffs was announced. Now, if that part holds up, then I think we should be okay. At least that is what the markets are suggesting. So I'll take you through what all things are there, and also I will take you through today how we are placed in our markets, how our indices are, how our sectors are, which sectors have got the most affected from this recent bout of tariffs, and which are the sectors which are looking okay, and how are we placed. So I'm going to take you through all of that, starting with how currently the Nifty is indicating, and what the Asian markets are suggesting. So yeah, this is the ADR, this is the world markets. Yeah, so if you look at Gift Nifty, as I was saying, we are up almost 350 points. So 23,371 is what the futures are indicating. So I think we should open somewhere around 23,200, 250 odd, and that is going to be great. So it's 1.5% up. That's significant. It's pretty significant in terms of the number. And you look at all the other Asian markets, you look at Nikkei, that's almost up 2%, Straight Times 1.5%, Hang Seng is up 2.5%, and so on. So all the indexes are up, and Asia is looking pretty solid right now. What would that mean for our markets? If you look at this chart, this is the Nifty chart. We are going to open somewhere in this region, 23,200, and then we hopefully should make a dash for about 23,800, which is the first resistance. That was the same level where we peaked on March 25th, and we fell all the way to 21,700. When we were going up, then it was impossible to kind of believe that we can fall so much within a matter of like 10 days, but we did. We almost fell close to 8-10% in a matter of 10 days, and then the recovery over here has been equally sharp. So 23,200, we would have recovered half of it, more than half of it, and then 23,800 is the last top that we had seen. If we cross that, then 24,200 is something that the markets will look forward to. Now coming to how we are placed in terms of our markets and where the indexes are from their 52 weeks high. So if you look at this, Fin Nifty is almost now heading back to its 52-week high, and it has been one of the strongest sectors. Banking and financial banking is just 6% down, and you look at Nifty is 13% down. 13% versus a 2.9%. This is how outperformance happens when it does. Pharma is now minus 14. Nifty 500 is minus 15. Midcap is minus 16. FMCG has made a good comeback. It's at minus 16. Nifty next is at minus 21, and small cap is at minus 21. The problem area is IT. Now you look at IT is down almost minus 30%. Now IT was something that was holding out all this while, but not any longer. So IT has gone to minus 30 almost, and then the other indices, momentum indices, alpha, etc., are completely down. They are minus 30 still. But the thing is that these indices, they go up 10-15% in a matter of week, so I would not read too much into them. That is the nature of these indices. But IT is something that we need to really keep an eye out, because IT has reached a level of 2021. IT index was at similar levels in 2021, and that is where it is. So we will have to see, is it a good time to buy IT? Because whenever IT falls this much, then it's usually a decent time, but it's not performed anything in the last few years. Now I will take you through how our indices have performed over the last 1 week, 3 months, 1 year, 3 years, 5 years, 10 years. Now, if you look at what the performance has been over the last, let's start off with 3 months. As I was saying, now you can look at equity sector technologies minus 22.5, and small cap is at minus 11. So even IT has fallen double of small cap. So you can imagine the kind of beating that IT has taken. A lot of it has got to do with Nasdaq. A lot of it has got to do with uncertainty in terms of US policies, etc. But it has fallen tremendously, right? Mid cap is at minus 9. And which are the best performing ones? You look at this gold. Now gold is the best performing at 18.4% in the last 3 months, and there's no sign of stopping it. Okay, and the next one you'll be very interested to see is Gilt. Gilt with a 10-year constant duration has done very well. So anyone who is invested in equity bond funds, in bond funds, in Gilt funds, in credit risk funds, even in liquid funds, has got a very good return. So I always say that a certain portion of your corpus should definitely be in fixed income debt, and people who have invested in debt through mutual funds, through bonds, etc., are now really seeing their portfolios fly. In fact, for some of the clients that had made the portfolio, their bond portfolio is doing much better than the equity portfolio. So it is very critical to have a combination of fixed income and equities and gold in your portfolio. So if anyone is interested in making their mutual fund portfolio a very solid mutual fund portfolio, they can contact me through the link given below in the description box, and then I will get in touch with you, and I will help you to make a very good strong mutual fund portfolio, which will have a combination of debt, equity, gold, etc., everything. And we will have certain weightages assigned to each of the categories, and then we rebalance. So by doing that, we have seen we get really good performance, and hopefully you'll be able to generate a alpha if we stick to the strategies that we follow. That is what the past data says. But having said that, there is no guarantee of future returns. That is a standard disclaimer. Now, coming to the performance over last 1 year. Now, let us look at the performance over last 1 year. Now, energy, technology, and PSU are the worst performing indices. Now you would have seen that PSU was one of the best performing, infrastructure, PSU were one of the best performing, but they have become the worst performing now. So energy is down -5, technology -4, PSU -4, large and mid cap -2, MNC -2. Now which are the ones that have been doing well? Of course, gold, silver, uh, Gilt, which is given 11%. So you can imagine that debt is giving you 11%. That is because the interest rates are falling down and Gilt will do well. Pharma is given 10%, and again the debt instruments come in. So if I just take off the debt, if I just go on to equity part, so let's see which are the ones. Pharma has done the best at 10, international has done 5.2, consumption has done well. So consumption is kind of making a comeback. We can see over here. Multicap has done well. Mid cap is flat at 1%. So this is how the skew is. But let's broaden our horizon and let's look at 3 years. 3 years, of course, PSUs which are hugely undervalued, they went up 4-5x, and they're still giving a 27% CAGR. Infrastructure is giving a CAGR. So this 3 years is showing you the rally of the last bull run, the leaders of the last bull run. Now that might or might not, typically they do not become the next leaders in the next bull run. Leaders change, segments change, sectors change, so it is always a new sector which will drive the next bull run. So PSU, defense, railways were the leaders of the last bull run, and that is why you are seeing that 3-year CAGR is still very good in spite of them falling 30, 40, 50% also. But going ahead, will they be the new leaders? That is not emerging in from this particular chart, right? So we have to identify what are going to be the next leaders of the next bull run. and then take our bets accordingly. So banking and financials is something that looks very interesting. It has last 1 year it has given a 3% return, which is not very high, but last 1 year we have also been stuck in a bear phase. So you look at it, this is the ones, two, three, fourth best performing sector. Banking has not done too much over the last 3 years. Also, it has given a 13% only, but over the last 5 years it has done well. So we also have to broaden our horizons, and let's look at last 5 years. This is from the COVID bottom, and let's look which sectors have performed the best for us. So of course, small cap, this entire rally from March 23 was led by small cap. So small cap is the best performing at 33%. Anyone who invested in small cap would have gained significantly. And when you are taking direct equities, then it is, or buying direct stocks, it's very difficult to identify small cap. It's very risky also. So what is the right way? The right way is to play them through ETFs, to play them through mutual funds and so on. And again, as I have said, that when I build a portfolio for the clients, when we sit together, we take into account all these factors. We take into account whether you have investments in small caps or not, you have investment in mid caps or not, you have investment in factor indices or not. You should not miss out on any of the rallies, because you don't know where the rally is going to come from. I remember in March 23, no one was willing to touch small caps, no one, because it was such a beaten down sector. The valuations had gone so low, and that is when I went overweight in small caps for my own particular portfolio. It did really fantastically well, because the next leg of rally was led by small caps. So it is also a function of seeing how the valuations are in a particular sector and then taking calls accordingly. So if you see, last 5 years, small cap, PSU, mid cap has done the best. Okay, but in terms of the sectors, the last 10 years, international has not done very well. MNCs has not done very well. Also, part of the reason was that these did not fall so much, during the COVID crisis. Like MNC, I remember names like Lever and all. They did not even fall at all during COVID. So they are pretty much there for the last 5 years. But all the others have done well. Now let us look at the even broader one. Let us look at the last 10 years, how 10 years have performed, right? So this picture is slightly different over there. Now you will look at the returns tapering down. So small cap, even after giving 33% the last 5 years, has just given 14.9% the last 10 years. This is the more or less the average returns that you will see over the long period of time, right? Energy has given 15, technology has given 14, and so on. So, and the worst performing ones, let's look at the worst: international, MNC, and banking. So banking has been a laggard. I don't know whether its time is already come, because it has fallen the least in this particular bear market. And as I showed you in the first charts, that it has actually gone, it is almost reaching its 52-week high, much ahead of others. So I don't know whether it is going to be a banking led bull rally, the next one. We don't know, but the indications are good, looking good for banking sector, just from the data perspective. So this was a small analysis I thought I will share with you on sectors and how they rotate, and how one sector performs in one particular bull market, and then there's a huge drawdown of that sector, and then the next sector takes over in the next bull run. The stocks, definitely there is no, I mean, it's very, very difficult to pick up stocks, identify the winners in the bull run. And so I think for retail it is best to stick to mutual funds. That has been my philosophy. Now, coming to where the international Qs are right now, this is how the international Qs are stacked up. So S&P VIX looks like it might cool down a bit, which is good. US 10 years is now thankfully going down. It's at 4.4. Not still out of the woods, but still decent. Nasdaq rallied, and again futures are up 1.6%, which is excellent news. Bitcoin is at 84,000, which is fine. US dollar index is broken below 100. Now that's good news for emerging markets. And then Brent oil is at 64. This is excellent news for India. And USD INR is at 86, which is fine. Gold is continuing to make new all-time highs. It's at 32.27. It's cooled off a bit. It had gone to 32.50 odd, but it's cooled down a bit. So this chart I had shared in my previous video as well. So you can see how gold has been performing over the last 1 year, 5 years. This is the last 1 year, just straight parabolic rally. Last 5 years, look at it, it's just gone double, and so on. And now there is a target that has been given by UBS, JP Morgan, and Goldman. They upgrade gold, and they're saying that it can reach 4,500 US dollars to an ounce. Right now it is at 3,200. So this is the kind of predictions that have started to come in, and it just might, even if half of them come true, then it's going to be quite significant in terms of where the gold movement is. So as I have maintained, gold should be a part of your portfolio. It should anyway in my portfolio it is about 10 to 15%, varies between that. I haven't had to add any gold to my portfolio simply because it is running up so much, so it just keeps on going up, which is great. And what it does is when the equity markets are down, then gold will help your portfolio to stabilize, and it'll give you a smooth upward graph, which is very, very important for any particular investor or trader. uh, so that's it from me now. It looks all good. I thought I'll share the update with you today morning, though we are at a holiday today, but we have to prepare for tomorrow, and the queues are good, and hopefully we will get a good green day tomorrow. And it's much required, especially after the beating that was seen in the last few days. It looks like it's a welcome rally. It's going to be very welcome, and a lot of momentum names, alpha names, etc. should fly tomorrow. Let's see how it goes, whether we are able to sustain this up move or not, or whether we are looking at another downside. We don't know. We will only come to know the answer in the next few days. But this is what it is, and that's it from me now. If you like the content, please do subscribe to my channel. Please do share the video with your friends, family, in your WhatsApp group, etc. And I shall see you soon with another update. Take care. Bye bye.